It's a steady start today on expiry day. The Nifty hits 25,200 in early trade, led by banking index, metals and autos. They also rallied. The mid-caps marginally underperformed the key indices.
Among the underperformers today, we have Trent. Shares of Trent extend Monday's losses and fall as much as 4% in today's trading session, though currently sitting with a cut of 2%. The company's reported 17% revenue growth against expected 25%. Morgan Stanley cuts its target to sub 6,000, but expects margin improvement in the second quarter.
Shares of LTIMindtree trade with gains, though they're off highs after the company reached a multi-year agreement with leading global media and entertainment company, with reports suggesting the deal size of around $580 million. This represents LTIMindtree's largest strategic deal to date.
Shares of Metropolis Health trade higher after the company reported a 23% revenue growth for the second quarter. Preventive health checks, wellness offerings and core diagnostics aid growth.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and the markets are on a winning streak. The Nifty is up yet again, currently holding on to those gains at around the 25,180 odd mark, and the Nifty Bank as well is playing its role, Mangalam, as we have been seeing over the last few trading sessions. All of them green. Let's see whether or not they can stay green.
All of them green, and a lot of stocks are now picking pace, Nigel. You know, once the market continues to do well, feels a little more stable, people go out and buy a lot of stocks. And this time around, a lot of these consumer discretionary names, after a good update coming in from a lot of these names. So Kalyan Jewellers, for instance, before going into the session yesterday, was sitting on a decent winning streak. And then came the second quarter update. And the stock saw some bit of profit taking after that, maybe perhaps a bit of sell-on news. But today opened flat and now has seen a bit of a spike. So positive moves coming in on Kalyan Jewellers. Nykaa, 6% up move yesterday, continues into today as well, up around 2% right now. And Brainbee Solutions, the ones who sell products for First Cry, under First Cry, that too is up nearly 4% as we speak. A lot of these hotel and travel companies doing too well as well. Royal Orchid comes up for you on the screen. Yatra Online, a big mover in yesterday's trading session, particularly in the second half, along with Travel Tech, is now higher once again, up around 3%, taking this week's gains to closer to 9% on that counter. And Royal Orchid is the other one, which is up around 2.5%. So good time to get in Dharmesh Shah of ICICI Securities for a quick technical check on the market. Dharmesh, the belief is now that the market range has moved higher, or it's broken out of that 25,100, 25 to 150 sort of congestion, the room for an upside increases. Would you say the same? And where do you expect the next leg of move coming in for the Nifty?
Yeah, good morning, Mangalam. Yes, definitely. I think so. The week started on a very positive note after the series of underperformance of 3 weeks. We believe, I think so, this momentum should continue going forward, and we expect Nifty to head towards 25,500 is likely target for the Nifty. So yeah, it's something, I think so, the clearly market, if you see for last few trading sessions, it's a buy on dips type market. So we believe any dip, I think so, towards 24,800, 24,900 should be looked as a buying opportunity. Also, if you look from the seasonality perspective from the October month, I think so for last 12 years, October has been a volatile month, but out of 12 times, 9 times, October has always been a positive with an average return of more than 3%. So seasonality also favors towards the momentum on the higher side, and also the market breadth, which is a more indicator to understand the strength of the market, is also moving with a more positive, where the percentage of stocks trading above the 200-day moving average has improved from 25% to 60%. So it looks like, I think so, the momentum should continue, and we should be looking for a target of 25,500 in the days to come.
Okay, all right. You're sounding quite optimistic then on the up move. Hi, Dharmesh. Good to have you on the show. Give us your view on the Nifty Bank. That's been the leader clearly, right? It's conquered all the key technical levels, 20, 50, 100, 200. What's the view out there? And fill us in with a couple of your trading calls.
Yeah, good morning, Nigel. Yes, definitely. I think so. If you look at the bank Nifty particular, the 8 trading sessions decline got replaced in the 4 trading sessions. So clearly, I think so, the faster time of retracement indicating, I think so, a structural turnaround happening for the bank Nifty. We expect bank Nifty to challenge the life high and should be looking for a target of around 57,200 in the days to come. So yes, constructive positive for the bank Nifty, not only for the bank Nifty, but apart from that, supporting like NBFCs and the AMCs are the ones where we remain to be positive going forward. So bank Nifty again, 55,600 to 700 has been the strong support which should hold in this current corrective phase, in this current momentum, and should be looking for a target of 57,200. As far as stock specific is concerned, we remain to be positive for State Bank of India. Again, PSU banks have been relatively outperformance in this current corrective phase. We expect State Bank again has already witnessed a falling trend line breakout of long-term trend line. It looks like I think so the worst seems to be getting over for the State Bank of India, and we should be looking for a target of around 950, keeping a stop loss of 815. So State Bank remains to be a topic. Apart from that, oil and gas as a sector, which has been the underperformer for a long time, for last 2 years, seems to be moving up. Like OMCs, we have already seen a good momentum happening. We expect Reliance Industries again, the most underperformer for a long time. Expecting, I think so, Reliance finding a support at 52-week EMA and also on the rising trend line. Expect the Reliance to head towards 1530, keeping a stop loss of 1265.
All right, you're positive on SBI and Reliance. Just two questions before we let you go. Dharmesh, Maruti Suzuki, that's continued to do well. In fact, up nearly 50% this year. Now, this morning, it's done extremely well as well. And the other one is Eternal. This week, it seems to have broken out. It's up around 5% this week. And currently, as we speak, it's closer to its 52-week high.
Yes, definitely, Mangalam, if you look for the Maruti, I think so auto as a sector remains to be the positive for, and we remain to be constructive positive from the medium-term perspective. Maruti, again, a trendline breakout happening for 16,200 has been acting as a resistance, which we expect should take out on the higher side, and we should be looking for a target of around 16,800 to 17,000 for Maruti. As far as the internal is concerned, yes, internal again a relatively outperformance, making higher top, higher bottom on all the time frame. Looks for target of around 360-65 for internal, keeping a stop loss of 315.
All right, take that point. Thank you so much, Dharmesh, for joining in and giving us your views on the market. Target of 25,500 on the Nifty, positive on Reliance and State Bank of India, along with targets that he's given on both Maruti as well as Eternal 2. The stop loss on Eternal at 315. Take a short break, come back, get you more on the stocks and a lot of moves that are taking place right now in the market. Stay with us. Continues to hold well for the frontline index. Just keep an eye out on Vodafone Idea. Was under pressure in yesterday's trading session. Now seems to have recovered a little bit, up around 2%. Exide is the other one, which is fairly excited in trade today, up around 2% for that stock as well. And then you have a couple of these metal names. Hindustan Copper for one, RHI Magnesita, which is up around 7%, and continuous traction that we're seeing in names like Star Health as well, which is up around 3% right now. From the start of October, it's up in 5% mark as well. So Star Health is the other one which has moved higher. So let's talk about a bunch of these losers in today's trading session at a time when all the other stocks in the market are gaining. The biggest is Trent on the Nifty right now, and that's on account of its second quarter update, where the revenue came in at 17% growth, a little over 5,000 crores, which implies a decline both quarter on quarter as well as a decline in pace from the first quarter, along with what the company has been guiding for earlier too. First half of this year, they've done 19% revenue growth, obviously led by 20% in the first quarter, 17% in the second quarter. The company's own historic growth rate has been around 35%, and they had told the analysts earlier that they can sustain around 25% revenue CAGR, which implies that the second half of this year, the asking rate increases for them to manage and get to that 25% mark. And that is something that, the analysts will be monitoring. The same-store sales growth in Zudio, as well as the second half performance, especially as the prices of GST products come down. Most of the products in Zudio sold below 2,500 rupees. And growth from their newer formats also is something that the street will be eyeing very closely. This morning, we've got a note coming in from Morgan Stanley. They maintain their overweight rating on the stock. The target is cut to sub 5,900, a little around 5,892. And they believe that, the second quarter performance has been shy of their expectations. They worked at around 25%. The company has reported 17%. Though they're a little sanguine on the margins, they believe margins could improve versus the previous quarter, which explains their overweight rating. And the stance that they have for the second half of this year maintains that, maybe there could be some improvement from current levels, and perhaps this could be a bottoming out quarter. But speaking about some stocks buzzing around on account of their second quarter updates, Ekta joins in. Metropolis Health was a good one, Ekta.
Well, yes. Overall, they've said that they reported a 23% year-on-year consolidated revenue growth in Q2. It was led by a strong performance in their preventive health check segment, which is True Health, and the wellness offerings. Now, growth, according to them, came in despite the lower incidences of viral diseases this time, such as dengue and malaria. Core diagnostics has improved in terms of margin, so it's come in at around high single-digit margin in Q2 from a break-even in Q4 of FY26. EBITDA margins as a whole have remained strong at a consolidated level. True Health Wellness, which is basically their preventive testing arm, was up 25%. Specialty segment was up around 36%. B2C revenue rose 16%. B2B revenue rose 34% for them. The company remains debt-free and a net cash surplus of 55 crores.
Okay, all right. Thanks a lot for that, Ekta. Well, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Neha of moneycontrol.com joins us to talk about a stock that she's tracking closely. Neha?
Today's stock idea is SBI. SBI saw a healthy operational performance in Q1 FY26, posting return on asset of about 1.1% on a balance sheet of rupees 74 lakh crore. The key question now is that what will drive the earnings going forward? With a low domestic credit to deposit ratio of 69% and rupees 25,000 crore of equity capital raise done through QIP last month, SBI has a significant capacity to expand its credit portfolio at a healthy pace. Management has guided loan growth of 12 to 13% in FY26. Cost to income ratio improvement will be gradual for the bank due to inherent cost rigidities. The credit cost is already at a low level, which leaves a little room for further decline. The key support to ROA in FY26 will come from margin. Though margin will be under pressure in Q2 FY26, it is likely to improve in the second half of the current fiscal, driven by the lower cost of funds following the rate reduction on savings account and fixed deposit rates by the bank, and it will also be supported by the CRR reduction, which will be effective from the 1st October. In terms of valuation, the bank is currently trading at around just one-time core book value estimated for FY27 after adjusting the valuation of subsidiaries. The valuation is attractive given that ROA is above 1% and return on equity is 18 to 19%, and this leaves a room for valuation re-rating. The stock offers a favorable risk-reward at the current level.
Okay, all right. Thanks a lot for that, Neha. Well, time to slip into a quick break. You come back, we'll continue to focus on markets and on stock-specific action. Don't go anywhere. Welcome back. You're tuned in to Chartbusters. You're on CNBC-TV18. Well, let's talk about IndiGlobe Aviation. The stock has had a good run, but Investec has come out with an interesting note on the company. Sudarshan joins us to help us out with that sell rating call that they have. Sud?
So today the stock is trading with a cut of nearly 1% after Investec has come out with a note. It has maintained sell call with a target of rupees 4,050 per share, which implies a downside of almost 30% from current levels. It believes that Q2 is going to be weak, with companies likely to report profit before loss of almost 1,000 crore. And on the EPS estimate front, in H1 FY26, EPS estimate is of rupees 28 per share. Now Investec says that to achieve FY26 estimate, company has to deliver EPS of almost 193 per share in H2, which looks very unlikely. Also, after Q1, which had seen a decline of almost 20% YY in EPS, there was a minor cut in consensus estimate, which Investec expects to increase after company reports Q2 earnings. Now, on the catalyst front, index inclusion catalyst is now behind, so it says that now stock should realign with earnings fundamentals.
All right, stocks should realign with earnings fundamentals. That's the word coming in on IndiGlobe Aviation. Will be very interesting to see where it goes from here, given the sort of traction that we've seen in air travel and Indigo's own market share as well. With that, though, we'll wrap up on this edition of Chartbusters with the news that the Nifty is still holding around that 25,160 mark, marginally off the highs, but nothing really to complain about. It's been doing extremely well. We've seen some weakness in HUL, which has moved lower, and Infosys is the other one, which has moved lower from the highs, but by and large, holding fairly well in the green for all the top indices. Take a short break, come back, and on the other side, we have the team of Trading Hour waiting by to detail all things market and perhaps get in some special conversations for you as well.